what a crazy December it was,
Yeah.
and then the run up into the middle of January now. I wonder which better reflects mood.
Well, it's funny. Maybe it's best to level set. When you look at last year, the markets were down about 6% or so. NASDAQ was down about 4%, and tech only down about 2 or so when you look at the full year. As you think about heading into this year, you had a very strong IPO backlog last year. It was the best record on year since 2014. You had tremendous M&A, the best since 2015. Before that, a couple of years before that. So you've had a very strong backdrop here. But investors, as we turn it towards investors, are really looking for that alpha, right? So if you look at the average tech IPO last year, they got a return of over 30% or so by playing in those IPOs. So I think you're seeing a salacious appetite right now for investors. I think you're going to see a strong backlog come along here for the IPO market.
Really?
Yeah.
Even shutdown notwithstanding and filings being blocked or whatever?
So we get a lot of questions, the biggest questions we get by boards, by executives, is around interest rates, what it means for investors, the government shutdown, what that means, trades and tariffs and all of what that means. On the SEC side of things, as part of the shutdown, yeah, I think it does push things out a little bit as that gets settled here. I think we're hopeful for some sort of near-term resolution on that. But I think in the meantime, what you're seeing happening is companies, executives, boards of these companies are pushing forward, assuming we have some sort of resolution. So I think you'll see a nice strong backlog coming through 2019.
What about the Netflix effect, Bob? And I'm wondering, what if they pulled an iPhone 10? They raised prices ahead of maybe some tepid growth numbers in subscriber growth. Could we see a reversal in investor reaction to that price hike, and how strong does subscriber growth have to be?
Yeah, it's a great question, and obviously, as Carl hit on before, the shares are up over 30%, I think, this quarter alone, so it's been a nice run into that. I think they're looking for about 9 million or so subs to be added to tonight. I think the real question here is more around this elasticity of demand, and quite honestly, the value of the content that Netflix is providing to the price versus what you get for a typical cable provider. And what I think Reed's done a very good job of talking about is I don't think it's mutually exclusive, right? He's talked about always having a portfolio of subscription services that users will have. So you won't have just HBO Go or just Netflix or just cable, but having a portfolio. But tonight we'll get some good insight on what they're thinking about for 2019.
Should investors be buying Netflix ahead of these earnings?
Well, I can't comment exactly on a specific stock there, but I think what you've seen so far is that you've seen strong demand so far, strong subscriber growth, and the fact they're making these prices changes probably shows confidence.
But if we are at peak cash flow burn, right?
Yeah.
And they already bury everybody else in terms of content acquisition cost, what's the value in making that delta even larger, right?
Yeah.
I mean, do they do something else? Bring it to the bottom line, pay a dividend, something?
Yeah. Well, I mean, what's interesting on that, too, is you've seen a bunch of new subscription offerings being announced by traditional media players and others, right? And into the teeth of increasing competition, they're actually raising prices, right? So what does that actually tell you that they're seeing in their own data and what they think can be done here? So it'll be interesting to see how they go through it tonight.
What's the lesson of Snap, especially as you look at all of these startups looking to IPO? Here's a company that looks from the public market perspective to be broken. The product really isn't growing in engagement the way you would hope. The business model isn't particularly differentiated. And you got top execs who don't seem to believe in it because they're leaving. What does a startup coming to market take from that, and how good you have to be?
So first of all, I think when it comes to Snapchat, it's all about Evan, right? He's chief product designer. He's the CEO of the company. He controls the company. The big near-term thing here will be getting out the Android rollout and seeing how that resonates in the market. Will you start to get subscriber growth based on that again, or user growth based on that again? So I think that's critical. As far as the executives, there's been some high-profile names in the press, but don't forget they also just brought in 2 high-profile names as well. A new CSO, a new CBO, so they're also bringing people in. But at the end of the day, it's going to come down to the product redesign that Evan's been doing, the rollout of Android, and how that resonates with the users. But there are great lessons there. I mean, he took this company public into major changes taking place in the company. And so as entrepreneurs thinking about going IPO, think about that. How do you roll out your product so it coalesces with the timing of IPO?
Within tech, do you believe, as many do, that hardware has the disadvantage because of exposure to China, tariffs, the cycle, what have you, that it's still about a software eating world?
I do think there's benefits to both sides, but on the software side of things, you got to particularly love SaaS components of recurring revenues, sticky customers, low churns, very visible revenue that you can see going forward. And you see that in the multiples, quite honestly. When you look what investors pay for these various companies, it gets reflected in those multiples. So I think that's very sticky and helpful.
But it's not like you think chips are cheap and deserve to be bought. first.
Yeah, and I'll let investors play it on decide that based on the various multiples they're willing to pay. But I see value across all the various aspects or verticals within tech. It's just a matter of what multiple you're willing to pay, and then at the end of the day, that all comes down to the growth you think you're going to see, as well as the margins you think you can sustain.
The escalating crackdown on Huawei right now,
Yeah.
is that having ripple effects on some of the companies you cover? How should investors be thinking about that?
We're getting a lot of questions on that, and particularly where that ultimately escalates to is what does it mean as far as the trade wars, right? How long will this last? What's a likely resolution? And what I think is interesting about this is it's not just investors asking these questions, it's the business executives, and they're being demanded on by their boards to have views on this. And what does it mean if it lasts a lot longer? What if it's onerous? Or what if you have a resolution in the near term here? So a lot of questions at the board level being asked by that.
Is there a substantial take one way or the other on Huawei from the companies that you're talking to? Like, I know there's this political noise around the degree to which its product is reliable.
Yeah.
But there hasn't been a ton of specific evidence of the product being compromised.
Yeah.
Especially within the context of, we know Cisco's product was compromised by the U.S. government a few years back. In your conversations, what's the read on that?
Yeah, so I'll even take it a level higher than that. What you're seeing a lot of conversation around is just data privacy, security, IP protection. You've seen Tim Cook over at Apple write a lot about this very recently. So you're seeing a lot of questions around that, and then you've seen companies talk about it. So even take it back to Facebook. They've talked about putting a lot more resources towards data privacy protection. I think you're seeing much more focus on this. And then from an investor point of view, what's the incremental cost that is attached to that to make sure data is being protected and IP is being protected?
Let's dig into that a little bit more, because
Yeah.
I know one of the conversations we had multiple times on this show last week was that maybe the risk of regulation, at least here in the U.S., had abated, especially in light of all the gridlock you're seeing in D.C. Can't even get a partial government shutdown, ended right now.
Yeah.
On the flip side, Senator Marco Rubio comes out with a privacy bill yesterday. Is this still very much on the table?
I think so, and I'll let the politician experts comment specifically on that. But I will say this, that it is one of the top topics we talk about to boards and to executives, is how exactly is that going to play out, and particularly what it means as far as incremental hiring, cost, data protection, all of that, what it means ultimately to your business model, and ultimately what it means to serving the consumer and protecting that consumer.
Finally, if you're right about pent-up demand for IPOs,
Yeah.
who's champing at the bit most on the list? I mean, Uber, Pinterest, Lyft, Airbnb, you know the list.
Yeah, I mean, there's a list that's out there in the public domain, and I think you're going to see these companies ramp up into that. As we talk to investors ahead of this, they're very much looking for this incremental alpha. As you know, it was a very tough year last year, especially having that differentiation from the markets. And can they get great deals on some of these companies that are coming out now, maybe a little cheaper than they were 6 months ago, right? So can you get to these sort of generational, time-changing companies that you can ride for a very long time, not just for a quarter, but for multiple years?
It sounds like you think it's a first half phenomenon, if in fact the shutdown doesn't go on forever.
I think that's one of the big questions, right? It's what's going to happen with the shutdown, how quickly does that get resolved?
These are very big companies, many of them. A lot of them are not profitable either. Is that going to matter?
Well, I think at the end of the day, investors will definitely look at profitability, right? But what they'll really look at is the atomic units below that. So how are the unit economics changing? Are they positive? Are they getting incrementally better? How do I think about those units as they scale over time? Because it's one thing to be losing money due to cost. It's another thing to be losing money because of investment. And so they'll try and parse that apart.